The idea behind support and resistance is that there are certain price levels that act as a barrier and makes the price stop and reverse. Support is a level that prevents the price from being pushed downwards. Resistance is a level that prevents the price from being pushed upwards. The more times support or resistance level have been tested, the stronger it gets. It happens because the more obvious a level is, the more traders will be placing their buy or sell orders there. Let me show you what I mean. Would you buy here? Probably not, as there is no indication that the price is going to reverse. How about now? The price has reversed at this point once. Why wouldn't it do the same now? But what about now? At this point, price is reversed at the same level 7 times in a row. At this point, this level is obvious not only to you, but most of the traders out there. But unfortunately, we don't live in a perfect world, and support and resistance levels don't hold forever, which brings us to the next point. When support or resistance level breaks, the stronger it has been, the stronger the follow-through for the next move will be. So why is that? Take a look at the previous example. So this level has held support 7 times in the past. If you had bought it here, the 7th time price approached this level, where would you put your stop? Your stop loss would probably be somewhere here, just below the support. Now, let's think a bit about what really is a stop loss order. When you buy a currency pair, the only way to get out of this trade is to sell it back to the market. The reverse is true when you go short on a pair. When you have sold the currency pair, the only way to get out of the market is by buying. So in this example here, remember, not only your stop is just below the support. Tons of traders put it in the same position, and when the sellers took control over the market and price started to break through the support, it took out all the stops, which, as we just figured, are simply more sell orders, which in turn drives the price lower with a lot of momentum. And now we get to the point I use in trading every day. In theory, every support should become resistance, and every resistance should become support. Here you can see that price was rising and met resistance. When it broke through, it tested the same level from the upside, and it became as new support. The same can be seen in a downtrend. The price was falling, it met support, and when it managed to break through, it tested it as the new resistance. Let me show you why that happens. A lot of traders went short here as the price hit resistance. However, either they used a wide stop loss or didn't use it at all. So when the price broke through, they didn't automatically get stopped out. As they don't want to accept loss, they are waiting for the price to retrace back towards their entry point. And when they are close enough to the break-even point, they close their position. And as we just talked a couple of minutes ago, the only way to get out of the sold position is to buy. So as the traders close their losing positions, new buyers also appear, and that drives the price up with momentum. So how to draw support and resistance? As a lot of things in trading, drawing support and resistance is quite subjective process. Sometimes circumstances ask you to draw it one way, sometimes differently, but we are going to talk more about that in later chapters. Now we need to look at another type of support and resistance.